everyone, my name is Amanda Putri Genesti, with NPM 22411014. I will explain about tax audits. Tax audit is a tax audit process carried out by tax authorities, such as the Directorate General of Taxes in Indonesia, to ensure that taxpayers (WP) have reported, paid and complied with tax provisions correctly and honestly. The main purpose of a tax audit is to test tax compliance and increase state revenues. 1. Tax audit objectives: compliance verification. Ensure that taxpayers have reported and paid taxes according to applicable regulations. Tax law enforcement. Providing sanctions to taxpayers who commit violations as an effort to discipline the public. Collection of tax information. Identifying potential sources of state revenue from taxes and improving the quality of WP data. Increased state revenue, by increasing compliance and preventing tax avoidance. 2. Types of tax audits: routine audit, carried out periodically, usually for taxpayers with a certain risk profile. Special audit, carried out when there are certain indications, such as fraud, embezzlement, or suspicious tax reports. Field audit. Field audit. Tax auditors visit the taxpayer's business location or office to verify tax documents and financial reports directly. Office audit. Office audit, carried out at the tax authority office without visiting the taxpayer, usually by requesting certain documents from the taxpayer. 3. Stages in tax audit. Audit notification. The tax authority notifies the taxpayer about the audit plan. Data collection. Auditors collect relevant data and documents, such as financial reports, transaction evidence, and other supporting data. Data analysis and verification. Auditors carry out analysis and verification of the documents provided to see their conformity with tax regulations. Field inspection. If necessary, if the inspection is carried out in the field, the auditor can directly inspect business activities. Tax audit report. The auditor prepares an audit report, which contains the results of the audit as well as sanctions if discrepancies are found. Objections and appeals. Taxpayers can submit objections or appeals if they feel that the audit results are not appropriate. 4. Aspects examined in tax audit: compliance and tax payments, assessing whether taxes have been paid according to obligations. Tax reporting accuracy. Check whether the taxpayer's tax report corresponds to the actual income and expenses. Tax calculation accuracy. Ensure that tax calculations carried out by taxpayers are accurate. Validity of supporting evidence. Checking the validity of transaction evidence that is used as the 5. Sanctions in tax audit: administrative fines, usually imposed on taxpayers who are late in reporting or paying taxes. Tax interest, charged if there is an underpayment of tax identified after an audit. Criminal sanctions. In cases of serious tax fraud or evasion, taxpayers may be subject to criminal sanctions. 6. Taxpayer preparation for tax audit. Need documentation. Keep documents related to taxes and transactions neatly. Compliance with tax regulations. Ensure all tax reporting and payments comply with applicable regulations. Coordination with tax consultants. If necessary, taxpayers can consult with tax consultants to ensure optimal preparation. Tax audits play an important role in supporting state revenues and encouraging public compliance with taxes. Taxpayer preparation for tax audit. Need documentation. Keep documents related to taxes and transactions neatly. Compliance with tax regulations. Ensure all tax reporting and payments comply with applicable regulations. Coordination with tax consultants. If necessary, taxpayers can consult with tax consultants to ensure optimal preparation. Tax audits play an important role in supporting state revenues and encouraging public compliance with taxes. A tax audit is a detailed review of an individual's or a business's tax return conducted by the tax authority, such as the IRS in the United States, to verify the accuracy of reported income, deductions, credits, and payments. Audits can be triggered for several reasons, including red flags on a return, discrepancies between reported income and information reported by third parties, like employers or banks, random selection, or because the taxpayer's return is part of a particular group that is under investigation. Tax serves as the closing of the audit process, providing clarity on the taxpayer's tax position and ensuring future compliance. If you need more details about specific conclusions or specific steps to take after a tax audit, this conclusion concludes the tax audit for the period under review, noting that taxpayers are expected to implement all recommendations provided as well as improve reporting methods in the future. Upon completion of payment or requested follow-up, the audit will be officially closed by the tax authority.